All right, guys. Today I want to talk about Bitcoin. Now, let me just put a disclaimer out there. I'm not a financial planner. I am actually an entrepreneur. And the reason I'm doing this video today, because I think a lot of times when we hear new things that have been approved, we kind of get excited. How does it fit in my portfolio personally? And again, I don't suggest that anyone follow any strategy that I do. As an entrepreneur, that means that I operate a business with not as an individual, but with a group of people at the same time. That means I'm willing to take on risks that others are not. It means that there's a greater chance for volatility in the business as well. So when you think about it and you ask yourself that question, like, what does it mean to be an entrepreneur? It means I'm willing to take on risks that others decide that may not be best for their personal life. It means my risk reward tolerance is going to be a lot higher than the normal person. And I'm going to learn things that a normal person would not learn if you go out and get a formalized job where you draw an income. Well, when Bitcoin got announced earlier this month, particularly looking at it, I seen a couple of things that came out, and I just want to go over a few things and point out this Bitcoin ETF that has been introduced to the marketplace. And over the last 2 weeks, people have been piling in money, and they say, "Well, I'm getting involved in this ETF." Well, there's a couple of things to remember, but I want to point out something that was actually talked about by a gentleman on CNBC as well as the Fed chair. So I got two different things I want to point out, two different points of view I want to show. But take this to a note though. Anytime something is introduced and it's a fee-based system, for example, what I've learned in my experience from interacting with a trust is trust normally that's traded publicly are taxed. At least the fees are higher than other vehicles. Excuse me. Again, trusts that are actually traded on the New York Stock Exchange, fees are at a higher rate than traditionally if you just take a position and you acquire an equity position in any individual stocks. As you know, you would hear being an entrepreneur, I would actually be exposed to an individual stock with someone else who may have a financial advisor or through the IRA or through a consultant who's licensed in the state of federal Series 7 or Series 9 license would tell them, hey, or hedge fund, hey, you want to, go into a fund where we can reduce some exposure that you'll have to any form of capitulation, a drop in the share price. Well, interesting enough, this ETF is not an equity stake. So for me, I can't take possession. I'd rather go out and even though Bitcoin has no place, it's like a pet rock to me. For others, it's not. But to me, it's just like a pet rock. But for others, it's, they see it as the next technology that's an asset. For me, it's just a rock. But I do want to put out a warning. And again, I'm not giving this warning as an advisor. I'm giving this warning to myself. So when I look at this video later, I remind myself, remember what you said, that it's probably one of the most, the ETF is not for me. And I'm going to tell you why. I'll go into it in this video, but I just want to point out a couple of things. And I'm using this video today to just kind of help people have a better understanding, like myself, when it comes to what they mean by the word exposure versus taking possession. So let's jump into this video. It was on CNBC about 2 weeks ago, and it's talking about spot Bitcoin.
Crypto Trades, Anthony Pompliano, founder and partner at Pop Investment. Anthony, good to see you this morning.
Absolutely. Thanks for having me.
So I have to just dial back. I go back to when the SPY was listed 30 plus years ago. I covered it then. The USO, the oil ETF, the gold trust in 04 and 06. There was never anything like this anticipation. We don't talk about ETF launches and who the authorized participants are. This is bureaucratic back office stuff. It's just how the trades function. So all of which is to say the degree of anticipation of this and how it's made its way into the market is extreme. How is it not just a anticlimax when it happens?
Well, before he says anything, let me point something out. This video was actually being shot prior to the approval that was in the second week of January. So this was a video prior to the approval. The ETF has been approved by the Security Exchange Commission. 11 points about the ETFs that they did approve. But one thing they didn't approve was Bitcoin itself. Now, you guys need to understand that. That's still something that has not been approved by the Security Exchange Commission. I'll actually show you guys the Security Exchange Commission director talking about the fact that they approved the fee-based size. Because remember, Bitcoin is about, the whole reason for Bitcoin is about decentralization. It was never about centralization. So this ETF that they approve is a centralization. It takes away the overall what it was originally set for. I mean, the original founder, he wanted to do decentralization. It's one of the things Bitcoin was designed that you can actually take possession. You don't need any other party. So I think it's interesting for those ones out there who are hyping over this whole thing that has a view on decentralization, but yet this is centralized, which means you lose the advantage because you can't take possession. Just keep that a note for a second.
You should definitely go do that and not do it through the ETF. The second thing, though, is this kind of greater fool theory. One thing I always say to people is, what is the most valuable commodity in the world? In my opinion, it's computing power. Bitcoin is the strongest computer network in the world. And so when you're buying Bitcoin, you're buying an asset that is backed by the strongest commodity in the world. So when you start to think of it from that perspective, yes, it is internet native. Yes, it is for this kind of digital generation. But those people don't look at oil or gold or anything else as the most valuable commodity. They look at computing power, and that's why Bitcoin is so attractive to them.
Can I ask you a very simple question? If I own Bitcoin through an ETF, do I have greater protection of my ownership of that Bitcoin interest than I did through some of the exchanges where I've heard some nasty stories?
So you definitely have the exposure, and obviously it's a regulated entity. You have the ETF structure, all the things that I think Wall Street really enjoys about the protections of those regulated funds. What you don't have, though, is direct exposure and ownership of Bitcoin itself. So one of the beauties of Bitcoin is similar to cash. You can go to the ATM, you can take the cash out of the machine. With Bitcoin, you can actually take self-custody. You can own it. You don't have to rely on any counterparty. You don't have to rely on an exchange. You don't have to rely on an ETF provider, et cetera. And so people have to ask themselves, what is my comfort level? Am I comfortable taking self-custody, or do I just want the financial exposure and I don't want to deal with that? And I think that anticipation of the greatest show on earth, right? Bitcoin has been the best performing asset for the last 15 years, and Wall Street's basically been boxed out of it. They haven't had access to this asset. And so I think that's what you're seeing in that pent up excitement. One thing that I do caution these Wall Street investors is you can't trade this like other assets. We saw just yesterday about $1 billion of open interest got wiped out. The guys over at Reflexivity Research did a fantastic job outlining, saying, this asset in 2021 went up almost 800% from before the pandemic started to the kind of the top of the market.
Yeah.
During that time, there was 30% drawdowns. If you're going to try to get levered long and think that, hey, ETF gets approved and this thing just goes to the moon, you're likely to get shaken out or get liquidated.
That is really good advice. Just beware the volatility.
I mean, this thing is on a risk return basis, it's by far the most attractive asset in all the financial markets, but it comes with tons and tons of volatility. And so if you go back to 2017, it was $1,000. We're 45x since 2017. But along the way, we've had two 80% drawdowns, a plethora. I can't even count how many, 30+% drawdowns. And so Wall Street is saying, hey, ETF's coming, here we go. Now, I do think over a long period of time, Bitcoin's price is going to continue to go up. We're going to have a persistent bid from all these ETFs. Another thing people aren't talking about, everyone's talking about the primary fund flows. So retail or institutions buying this ETF. But actually what we're starting to see now is other publicly listed funds or ETFs are changing their prospectus to say that they can put up to 15% of their AUM in the Bitcoin ETF. So if you have the best performing asset and you got an ETF that's lagging, why would you not put Bitcoin in your ETF?
But all of this really formalizes the greater fool aspect of why Bitcoin should go up, right? It's just there are more people who are going to get in there and buy, and they have a new easy way to do it. Meanwhile, it's easier to own Bitcoin directly than it was to own a barrel of oil or a gold bar or a futures contract. When those things were introduced, it didn't change the overall price curve.
I think there's 2 points that you're making. First is when you buy this ETF, you are not buying Bitcoin. You are buying exposure to Bitcoin. But if you want to actually own Bitcoin,
Keep that in mind. If you buy the ETF, you are not buying Bitcoin. And I think that is one of the things that's not really being communicated. I had several associates tell me, hey, did you hear about BlackRock? Did you hear about Grayson? Did you hear about Fidelity's? Are you hearing? Are you hearing? Are you hearing? And at the end of the day, I say, you're not buying Bitcoin. You're buying exposure to Bitcoin. And you're paying exorbitant amount of fees in order to get that exposure for something you can't take possession of. Like you can't take possession of it. You cannot own equity stake in an ETF. I mean, you can go ask any financial advisor, and I suggest you do, ask them that question. Can I take an equity stake in an ETF? They're going to tell you no. Just like you can't take an equity stake in a mutual fund. But for the novice, the people who are not aware, who are thinking, I'm buying Bitcoin, you actually are not. You're getting exposure to Bitcoin, but you're actually not buying Bitcoin. You're not taking custody. And I just want to just make that to be very clear, because with all the hype around, there's some little dots of information that's being ignored. And when you are a person that's like myself, an entrepreneur, you're actually going after acquiring assets where you actually can hold them and you have a say-so in the operation of the organization. You're talking about, centralization. So what was the main reason this was approved? Stay tuned. I'll tell you at the end of the video. And it'll help you have a better understanding of what is this? What is this ETF that, I'm getting exposure. What does exposure really mean? And in case you guys don't know, the ETF is not actually correlated to the rise and fall of Bitcoin. So you can actually have Bitcoin rising, but the ETF not. You can actually have the ETF falling, but the actual Bitcoin not. So it's not actually connected to Bitcoin at the same time. As Bitcoin rises, the ETF doesn't have to rise. So that's what we mean by having exposure to it, being stuck with the fees of it. What another term maybe, if you really want to look at it, means you're funding something that you don't actually have an equity stake in. That's really what they're saying. Thank you for funding this overall. But guess what? You don't own the equity. We do. So let's just be very clear. So let's look what the federal chair said about this, because it's, you know, it's been approved. So this is a couple of days after it. Let's just kind of jump into it, and I want to just break this down as well.
SEC Chair Gary Gensler. Chair Gensler, we appreciate you being with us. Let me start by asking you this. Do you consider the decision historic? And it appears that it's a decision that you made either reluctantly or perhaps even begrudgingly.
Well, look, Andrew, this has been considered for a long time, as you know. Starting under Chair Clayton, we had disapproved a number of these over the years, and something had changed. I'm a deep believer in the rule of law and a respect for the courts, and taking a new court decision into consideration, we move forward. I think this is the most sustainable path forward.
So it appears, though, from what you're saying and reading through the decision as well, that what changed is not necessarily something inherent to crypto or Bitcoin per se, but what changed was what the courts did. Is that the way to think about this?
Well, again, I mean, we do everything here at the Securities and Exchange Commission within the law and within how the courts interpret those laws. And that's what the American people expect, and that's what we do here.
What is your message to investors about Bitcoin now? Because we're going to have all sorts of public investors now potentially have access to Bitcoin in a way that they didn't before. We were just talking to Larry Fink. He said that he got a huge wave of new investors getting into Bitcoin through this ETF. You have still suggested to be cautious about it. And I'm trying to understand how you think about those cross currents in terms of the message you're telling investors.
Well, look, Bitcoin itself, we did not approve, we do not endorse. This is a product called an exchange traded product, a way that investors can invest in that underlying non-security commodity called Bitcoin. But yes.
Let's pause it right there, because I think that's important. And this is what people are not getting. The more I look, Bitcoin ETFs was approved. The Securities and Exchange Commission did not. I mean, it's straight from Gary's mouth. He's a chair of the SEC. They did not approve Bitcoin. Okay. What they approved was the mechanism of Wall Street having people fund an item and not have an equity stake, but yet allow them to create another product that they can charge fees. What's the purpose of those fees? To be blatant honest with you and to be transparent as possible is this. If you are a licensed financial advisor, if you are a licensed Series 7 or Series 9, if you have a hedge fund, you have to pay fees once a year for your license criteria. This is a mechanism to allow them to generate revenue in order to be able to cover the cost of those fees and to bring in more economic stimulus. At the same time, you can go buy Bitcoin yourself. Just same way you can go buy a stock yourself. But yet you say, well, I don't feel comfortable going out and doing that, so I'm going to hire a financial advisor or I'm going to hire an asset manager to manage the money for me. You can take the same possession yourself. You can buy equity stake if versus saying in a Vanguard fund or in a Vesco fund, or even in a BlackRock fund, even in a hedge fund. I got exposure to Apple, but you don't actually own Apple. You own a piece of that fund for that company, but you don't own Apple. They own Apple. That's what this really is about. It's about BlackRock buying Bitcoin themselves and you funding them to buy it, and you having access to providing the funds for them so they don't have to go out and buy it themselves. And again, a lot of people are going out. A lot of you heard in the previous video that a lot of the fund managers are now changing overall. So you got people who are baby boomers who are in their retirement years or have a ton of money, and they can now take 15% and then put it into an exposure, but they don't actually own. So the feds did approve that mechanism of funding the companies to go out and acquire Bitcoin themselves and taking possession, but not you. Even though you can do it, you don't need that aspect of it. As an entrepreneur, I think this should be something that everyone should be aware of. So this is like not again, this is just something for me to just to share. But again, go seek your financial advisor, go seek the people that you pay who have the licenses that can go even more depth. But the fact is you're not actually taking possession of it. The whole reason for Bitcoin, the whole reason for the whole thing was decentralization, and this is centralization. And I believe he actually said it. So let me jump right back in the video.
Be aware that the underlying asset is a highly speculative, volatile asset. And amongst its use cases is really for illicit activity, money laundering and sanctions and ransomware and the like. And I know that you've asked other people over the last few days, is it being used as a store of value? It's a speculative, volatile store of value. Is it being used as a payment anywhere? Are we buying cups of coffee with it? Not really. The only payment mechanism it's being used for in sort of in a primary sense is illicit activity. So I think you've been spot on about that, Andrew.
Just on that note, Mr. Chairman, this is out, and I'm not going to take either side on the whole thing, and it's kind of funny. But these are
Let me just skip to this right here. He's going to actually kind of argue about it a second. Let me just skip to the chairman's talking again. So let's go about right here.
In this field and those innovations, which I taught about at MIT around a ledger system. It's just an accounting system called the blockchain technology. But there's an irony in the midst of this. Satoshi Nakamoto said this was going to be a decentralized system. And finance, this has led to centralization. Think about the irony of those who say this week is historic. This was about centralization and traditional means of finance.
Which goes exactly against the purpose of Bitcoin, guys. I mean, so anybody that's jumping into these ETFs, if you were a Bitcoin enthusiast, I mean, you really need to check yourself because you're going against your overall values. I mean, personally, let me just be honest. I don't only hold any Bitcoin. Let me just put it out there for full disclosure. I don't have it. I'm not interested in it. And the reason I consider it a pet rock. For those who may not understand what I mean by that, let's look at what took place since it was approved. Today it's now been active. The ETFs are up. A lot of money been put into it, but there's a lot of money that's been lost. What did you find out today? It was at $45 a couple of days. It's now at $39. So if you spent $45,000, okay, and you're looking at that was back, what day is this? So we go over let's go back over the last 5 days. So we're talking about January 21st. We had, let's go over okay, so let's go here. So on January the 8th, leading into the approval, it was $46,995.10. Period. We take the position and we say, now, what are we looking at? Well, I can tell you what we're looking at. January 11th is at 46. Here we are. That's the 11th. So we go literally 13 days, 14 days later, and it's at 39. That's a tremendous amount of value that just dropped. I mean, for one Bitcoin, tremendous amount of value. It doesn't pay a dividend. It has, again, it's technology. That's another thing. It's technology. It depends. And if you haven't seen the statistics out there, I'll throw them up on the screen in a second. Some statistics that I think is important about power. We still have an old power system here in the US and across the world. And when you think about the power shortages and how they still haven't improved just in general, we watch the power grid system calls that's over that they haven't updated with in Hawaii. Just remember that in the last 12 months, Hawaii was on fire. I mean, people, it's just not a secret. You know, Honolulu, I mean, it's not a secret. It was on fire. They had dry hydrants. It started because old power lines not being updated. And look how many houses were caught on fire behind that. I mean, so there's a power issue right now. The largest power company in Hawaii took a big hit on the stock market. I mean, their price dropped tremendously. It was trading above 30. Now, I believe, if I'm not mistaken, it's under $15 a share. You know, once all the houses get rebuilt, you know, the power comes back on, they do some improvements. You take 24 months, 36 months from now, who knows what that stock would probably be back. Would it be back at its highs prior to them really building all the houses or not? That's up for debate. But the reality is that we have an old power system, and this technology takes a tremendous amount of power. Um, you know, wind, solar they can't handle any of the renewables, can't handle at all Bitcoin. The power that's taken from these computers in order to mine the Bitcoin. And as the more we get closer to the last Bitcoin, the more power is going to be needed because the problems are going to become even more challenging to answer. And as they do this, it's going to put a strain on the power grid. And when it put a strain on the power grid, the reality is we're going to see blackouts that we've never seen before. This is you need to talk. You say, well, hey, how do you know that? Are you an engineer? No, I'm not an engineer. But there's statistics out there through the government that, and I'll throw them up screen in a second, that you will see that it's a major issue. It's not a secret. That's why China in 2021 banned, actually, was it 2021? I think it was 2021. China banned Bitcoin mining completely out of their country because of it was causing intermittent power surge and down. So now I'm not saying that China should be a indicator for what, you know, for anything, but the reality is that here's a country that likes to mimic and copyright everything. And what do? Ban it. They ban Bitcoin in their country. You Bitcoin mine, you go to jail in China. I mean, that's crazy. But the reality is people are still doing it. They still are not understanding that there's no way that renewable energies are going to replace fossil fuels if Bitcoin and these massive computers that take so much power, and this is the new technology. I'm not in disagreement saying it's a great ledger feature, but overall, I'm going to tell you that it's for anybody who just dumped a bunch of money and you took the position. One Bitcoin is now $39,000, and it was $45,000 leading into the approval. After the approval, this is these drawdowns that he warned about, 30% drawdowns. You just take the difference between the 46 and the 39, and you divide it. You're going to see that it's more than a 10% drawdown right now, closer to 15%. And you know, is this the bottom? Is the Bitcoin going to drop down to like the lower 30s? They've been trying to keep it around 40, but the reality is this is very speculative. And I think if most people are not warned, they don't have someone that can just be, you know, again, I'm not a licensed at all, so you don't have to take my advice, but I just think it's something good to do your research. And these are just 2 videos or many videos. And if you're going to make an informed decision, it means you're looking for information so you can make an informed decision. And that's what this is about today. You know, I wanted to do this show about Bitcoin and the new ETF because everyone's talking about it and people are asking me questions. And I'm like, you guys need to really do your research. I think it's more of FOMO right now. Oh, are you getting involved? No, I'm not. Let me just be very honest. No, I'm not interested in any ETFs, as I mentioned. You know, if you're going to fund something, it might be something that you can take possession of. If you're going to be funding something you can't take possession of, this is the reason that, you know, I don't frown on anyone who does, but, you know, I don't invest in mutual funds, nor do I invest in ETFs. How come?